Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. Yesterday we had the PPI number that did show some signs of cool off, which again supported the narrative that inflation has somewhat peaked in the US and provided the buoyancy required for a risk asset rally. Again, as I keep saying, these are narrative stories market participants create to make sense of the world, and data and statements by Fed changes these stories very quickly. JK, good morning. We have been seeing some correction in dollar index with some rally in equities, and even currencies like euro have been showing some strength. However, the question I want to ask you is that what stories are driving USD INR higher? We are seeing some strength in USD INR pair, or more appropriately put, some weakness in rupee, in spite of the major factors like oil, some correction. So take us through your thoughts on this and updates which you have for us.
Yes, Swaraj, rupee did confound the traders yesterday by weakening to 79.65 after opening strong at 79.22. Despite dollar weakness persisting against major currencies, what was behind this was importers using the dip to cover their payables. There were some rumors of defense payments being remitted and also stops triggered on a break of 79.55 for traders. The short-term traders have been taking bearish view on the US-INR, particularly after the US CPI data. What also works against the rupee was the crude prices again went up after International Energy Agency raised the oil demand growth forecast for this year, as natural gas prices drove some consumers to switch to oil. Brent is now trading at 19.15 after seeing a low of 92.78 last Friday. Of course, data showed that FIs had 2,500 crores of inflow into India, and our inflow for the month of August has touched 2 billion actually. But that all seems to have been absorbed by the demand from importers. We did not see dollar selling from PSU banks on the way, but I do expect them to return to action if the rupee breaches 79.70 today, which is the higher end of the recent range. Very unlikely that they will let it go too far further from these levels. We have a focus on US India CPI today, which is seen to have moderated further this month after having seen a peak of 7.79 in April. And it is still much on the upper side of the boundary, or rather the target band permitted to RBI. So we expect RBI to stay on course for more rate hikes. Two reasons: one, bring down inflation within the mandated limit; second, to maintain yield spread with US, as the latter is expected to hike at least by 0.5 in September, notwithstanding the lower CPI and PPI numbers seen this week. So I would expect CPI number even at 6.68, which is around the expectation, not to create any turbulence for the rupee or the Indian markets. Global markets, we have seen lower CPI on Wednesday, and PPI actually posted a negative number yesterday, meaning input prices actually fell in July. We have two sets of views among investors. One is a positive view that worst of inflation is over, and other which is concerned still about the, still in absolute terms, inflation rate is high. So what would now matter is the Fed views on the developments in the light of strong jobs report and also the unit labor cost, which remains high. Incidentally, weekly jobless claims rose further for the weekend at 5th August. And the 4-week average claims which hit a low of 1,70,000 in April first week, as is 2,52,000. So we will watch closely the Fed member statements in the days to come. Yesterday, San Francisco Fed President Daly said that it was too early to see the central bank declaring a victory against its fight against inflation, and that half percentage point rise in September was her baseline. We will have more clues on inflation today when Michigan inflation expectation preliminary survey is released, and then even import price data will be released. Fed fund futures are now pricing in a 58% chance of a 50 basis point hike in September, and only a 42% chance of 75 basis point increase. On the market action, after hitting the key resistance levels, S&P and Nasdaq retraced yesterday, keeping debate alive whether the recent recovery was a bear market rally or a reversal. Investors will wait for more clues from the data and the Fed before the next move. We are, of course, in the summer period, so we may just see some consolidative moves rather than directional move. On the yields, 10-year was up 11 BP, and 2-year was up 2 BP. This takes the 2 to 10 inversion to less extreme levels at 35 compared to 48 BP prior to the CPI. On the dollar, after a large move in the last two sessions, major currencies are stalling near their 55-day moving average. That's what technically people are watching, and maybe some profit taking is coming out here. Difficult to see euro break 1.0350, which used to be the previous strong support. And if it does break on a sustainable basis, even on an hourly closing, I think 1.05 should be reached quite fast. Nothing in Eurozone fundamental to suggest that, things are way improved. Dollar and key level is 132 and 130. I mean, looking at the chart, I see a break of 130 can even see 125, where the 200 DMA lies, and that has not been touched since February 2021. It's not out of place to think that way, particularly if the dollar yields and the inflation in US keeps coming down. So we have a good amount of data today. GBP data on GDP, trade and industrial production, then India CPI, US Michigan survey, and import prices. Then we slip into a very long break for the market starting tomorrow, and then 15th and 16th would be local holidays, and really it's a 4-day break for the markets. We don't know how market is going to behave. Some could probably, play safe by keeping near square, or maybe some would be risk averse and keep long position in the dollar. So it could be a kind of choppy action today. I don't think too much will happen on the USD INR front. So have a great long weekend and a happy Independence Day. Thank you.
Thank you, JK. As JK mentioned that it might be choppy today, considering we are having a very, very long weekend. And that's it from our end. As we in India celebrate our 75th Independence Day, we at Almus would like to wish all of you, our listeners, a very happy Independence Day. Uh, uh, as we keep saying, manage your risk as stories keep changing. That's it from our end. Thank you.